Paul, let's talk about the data. These guys think it's funny that I think we can ignore the futures this morning. How much is going to change? What is the potential for the payroll number later on today to change where we are with equities, to change where we are with markets? How big a miss or a hit do we have to have, positive or negative, to change the current trajectory?
Yeah, good morning, Guy. I'm with you. I'm not really that bothered about this payrolls number because for me it seems like most of the Fed board has already made up their mind that they want to cut interest rates, and that's what the market's pricing in with near certainty, right? So a move this month is, 90% plus priced in, 2 moves this year, lowering interest rates as well. I think, it would need to be a pretty massive upset, a very big upside surprise for the Fed to defer that cut since, so far we have not seen pushback, especially from Jerome Powell. Now, there's still time for him to do that, so I could be completely wrong and it could get upended. But I think that all the labour market data that we have seen since that payrolls revision this time last month has been pointing in the same direction, and that is a slowdown but not a crash, a slowdown that allows the Fed to do a benevolent cut rather than a panicked cut. And that's why the equities market is so happy. Lower interest rates, all things being equal, if it's not a crash situation, should be juicing the economy, should be helping companies with earnings, should be pushing up their equity valuations.
Paul, we've been talking again about the question marks over Fed independence. How is that question being reflected on in your part of the world, given the global implications of Fed changes?
It's a really good question. It's really relevant as well. Asian investors hold a lot of treasuries, right, across the board from China and Japan, and also, large pension funds that are putting more money into it, particularly the likes of Australia. What we're hearing from them, we've spoken to some of the biggest investment managers about this in the last couple of weeks. The biggest one said, not a problem for me. I'm quite happy to continue putting my money in the US at the moment. Another one said, actually, this is a concern and we're scaling back a little bit on our treasuries buying. So the jury is a little bit out. People are definitely paying attention to this. I feel like, what we really need, personal view here, would be some big shock. And I don't think that's going to come today, tomorrow. I think it would be quite a long time down the line before it would be something that would be dramatic enough to alter the investment path on a global or an Asia-wide scale.
Paul, how are investors in your area out there in Asia dealing with this rocky week it's been in Chinese stocks? Can Chinese regulators really pull off this slow bull market, which they want to seem to engineer?
Yeah, that's the conundrum, right? If you believe that they're going to try and pull off a slow bull market, why wouldn't you buy the stocks today? And what we're seeing is another big rebound, even though through this week we've had news that they would really rather try to contain the pace of the gains in the equities market. Remember, the Chinese economy doesn't look great at the moment, but it's a little bit like we've seen in the US in recent years. There is no alternative, and the tech story looks pretty good. And so people have been taking their cash off the sidelines and putting it into the stock market, or pulling it out of bonds, putting it into stocks and plying in to that momentum trade. So the authorities would like to call it. They've got plenty of ammo if they want to do that. So there's going to be a little bit of a tussle coming up in the future from that.